So, open and neutral industry DLT platforms. For those who are maybe not from the blockchain space, can we maybe start with a definition? And Walid, I'll look to you as someone who interviews people in this space. What are the various definitions that people hold for open and neutral industry DLT platforms? And actually, can you give us examples as well? Because I think that's really helpful for people.
No pressure then. Okay. So first of all, I've done 38 podcasts, and every single person I've asked to define what is blockchain, and everyone has a slightly different definition. So there is no such thing as a universal definition that can embrace it. Now, with regards to open and neutral, again, that's a very difficult thing because the purists will say open blockchains are more ones based around Ethereum or around Bitcoin. But then you could argue that private blockchains, more around the kind that B3I has been building, are neutral platforms, but are also they're open to market participants to join in. But if I've got a Bitcoin, I cannot connect myself, for example, with B3I's blockchain. So open and neutral, it's more the Ethereum, the Bitcoin, the purest kind of view of what is blockchain. But at the same time, it could be the permission of the private blockchains, which can be open to market participants, but not to the regular consumers, if that makes sense.
So, Chris, from a bank's perspective, then, what do you look for? What is open to you, and what is neutral to you from a bank's perspective, and what do you see as the benefits for you?
Yeah, I think first of all, great summary. I think that really counts the two different types of blockchain technology: the open one and the more closed one. What for us is very important is that it's open source. That means that the code we use, everybody can use, and the code we provide, others can provide as well. Bitcoin was open source, and therefore there are mainly about 2,000 Bitcoin alternatives. Some look a lot like Bitcoin, some not at all, but that really drives the industry and helps speed up development. What for us is very important that it's all about collaboration and engaging as many partners as possible. We are working on a WeTrade platform together with now 13, 14 other European banks. And we really want basically every bank in the world to adopt that platform. And that can't be happening if it's a very closed platform, very centralized, very strict. So we need to be open for the whole industry. And in the end, it's all about that collaboration and engaging and adoption.
And so, Ken, moving to you, with B3I, what's your experience been to date of B3I and trying to build an industry group that is open and neutral? And how open and neutral is B3I?
In terms of kicking off the whole group, which was instigated, in fact, by 5 of the major insurers and reinsurers, and Jags was one of them in Swiss Re. And that expanded quite quickly to 15. And the whole purpose of that group was more focused on improving or removing friction in a specific use case, a reinsurance use case, removing friction from that value chain, the transactional process. It was very, very, very focused. And I think the reason for the success of that group was actually that common interest. We were trying to fix something that the whole market suffered from. And that's probably why we succeeded, where many other consortia fail. We in B3I don't try to build things that give any particular company a singular competitive advantage. We're trying to fix issues for the whole market, and believe me, there are many, many that fall into that category.
So you're essentially building industry utility plays that benefit everybody in an open way, an inclusive way.
You could absolutely say that. We are very inclusive. We coined the phrase "by the market for the market" because we are essentially owned by the market, and we do things for the market itself.
So then, Jags, as a founding member of this organization, and as a large reinsurer, what are the incentives? What's the benefit to you in participating in such a platform?
Yeah, maybe I'll start with a quick background. When Steve from FinTech Connect, he approached me to be in this panel. He also asked me whether you have a proposal for the topic of the panel. And I very consciously picked this topic because I know that there is a lot of perspectives out there. What it means to be open, neutral, And I'm actually seeing that already from the panelists, because it depends on how you actually look at it. For me, when it comes to neutrality, that's the biggest differentiator distributed ledger technology platforms can provide. Because what's happening when multiple parties come together and transact using the same platform using DLT, there is a neutral aggregation of data. That's very different to the centralized aggregation of data that you see in Amazon's, Facebooks of the world. I think that's the biggest difference. So what does that mean? This neutrality means that you can actually collaborate together with the competitor. For example, Swiss Re, we have absolutely no hesitation working together with Munich Re in the B3I platform because of this neutrality factor. And the second thing about openness, for me, this is really about the kind of options and the possibilities the DLT networks can provide. As I imagine, if I were to look beyond insurance business, there are a number of DLT platforms emerging out there. And there is a possibility that in future, you can look at cross-industry, horizontal, and fully integrated value chains of the future, which are enabled by different DLT networks. I think with that perspective in mind, from Swiss Re side, we have been looking at this topic. Because this is not just about one project. This is not just about realizing efficiency gains on the post-placement side of our business or on the placement side of our business. This is about looking beyond the insurance business and collectively, together with other financial services companies, and look beyond, let's say, supply chain out there. They are trying to do the same thing. And how do we then collectively come together and realize the true potential behind this technology?
Thank you. So let's look beyond the insurance value chain then. Let's look at the banks. So with Chris, what's the use case? What's the first thing we can expect to see where banks are collaborating, where banks are potentially collaborating with insurers, or insurers are collaborating, that you see as the sort of the burning platform or the use case that's going to take off first? And what's the impact of that going to be to the bank?
At this moment, I see really hundreds and hundreds of use cases and proof of concepts being set in place. So I think we'll see a lot of stuff happening. Basically, how I define it is that banks can better collaborate. They can share their administration efforts, and therefore their customers can benefit from that. What we're seeing nowadays is trade finance. Trade finance is the biggest topic. As Rabobank, we participate in the Retrade consortium, and it will also be later on this day that someone talks about that. And in the Comgo platform, it's the trade commodity finance. What you basically see is the supply chains you were talking about, from the very farmer to the supermarket and everything that's in between. It's all the steps, documentation, payments, insurances, controls, etc. All the data from that will be shared and will be not manipulable. And therefore, that gives a lot more efficiency and less cost. So in the end, the consumers, the customers, benefit from that.
Thank you. So I have to say, in speaking to the panelists, I think every single one of you brought in some form of trade finance or supply chain as an area that you were all sort of focused on with the efforts you're doing. But I want to turn to Ken and then to Walid. Where do you see this going in the future? So that's where we start. How does that play out from there? How does that evolve, and where does that innovation take us beyond that first step?
Where does the innovation take us? I think it's all about fluidity, doing things a lot more efficiently and more effectively than we do today. But that's not where it stops. And as the previous speaker said, actually, it is about new business models. But they will emerge. The low-hanging fruit is actually removing that friction. And that friction could be cross-industry. I mean, we talk about supply chains, and let's not forget, healthcare, where there's an enormous amount of sensitive personal information which is being shared when we are on the operating table, and has been shared up to that point. That is a supply chain, in effect. and locking that down and making sure the right people see the right information and the wrong people don't see it. So I think the future looks like the banking blockchain network and the insurance one and supply chain and so on, being able to interoperate, being able to talk to each other, being able to exchange information. And fundamentally, this is all about exchanging data and moving that around in a very secure, in a very private, and a very efficient way. So interoperability probably comes into play in the longer term, because there won't only ever be one blockchain. There are already quite a few, but making sure that they can interoperate to ensure that fluidity happens.
And Walid?
Yeah, so in the last 2 years, we've produced more data that's ever been produced in the world in an aggregate version. And IoT is just coming online, so we're going to keep breaking that record on a yearly basis. And what the internet has given us is the ability to get all this kind of data in a digitized manner and for us to communicate it. But effectively, still this data is stuck in silos, whether it's in Facebook, Amazon, or all kinds of companies. And the analogy I like to use is up to the 1950s, the shipping industry, the containers were all different sizes. And so when you took cargo from one place to another, you needed harbors with the right equipment to load and unload. Then in the 50s, they got together and said, we're going to standardize those containers. And the trading economy just boomed. What blockchain is doing is standardizing the digital containers. And instead of carrying goods, it's going to carry data. And that data, which has value, whether it's of your property, whether it is an insurance policy, can be traded within the industry, but across industries. And that's the point that Ken also was touching on. Interoperability is going to be key. So what I predict is that in the next few years, we're not going to be talking like build on blockchain just because building on the internet is as ridiculous talking about that now. It's going to be ridiculous talking about building on a blockchain in the future, because it's going to be providing this kind of network across industries, just like the shipping industry did with the containers.
So that's an interesting point you raised about interoperability that you both sort of touched on, and that being the way forward. I'm going to put you on the spot, Jags. Where are we? Put a percentage on it. How interoperable are these platforms today, and what do you think is going to be needed to make them more interoperable to achieve the kind of things that we're talking about here?
We are not there yet. We are not even near. But probably that's also an opportunity where the tech industry can make progress on. And frankly speaking, I'm not bothered much about it, because if you look at the investment going in from the VC side into startups who are actively engaged in this space, there are projects like Cardano Foundation. They are doing excellent job, in my opinion, to understand how we can ensure scalability, interoperability, so that this is a sustainable model. But in my opinion, what's most important, critical at this stage, is you take the right approach. And you talked about the interoperability. I think we will get there. But I'll give an example of the marine trade supply chain, the trade lens that I keep talking about. And you mentioned about the data that is being generated. By the way, for some of you who are not aware of TradeLens, it is a marine trade supply chain DLT initiative, heavily anchored by Maersk, the shipping line, and IBM. They started this project 2 years ago, and they remain focused on one thing, and that is delivery. For them, delivery means bring together all the key participants from the ecosystem and enable them to transact using the same platform. Everybody is there with a single goal. And now, this platform is covering approximately 20% of the cargo volume, where you can get real-time information about the movement of cargo. And that's a huge jump, because we are in the marine business for a long time, from the insurance perspective. We know actually we have today's process, today's business, 21st century business, but the processes are 17th century old. And that's the real opportunity, in my opinion. If we can make it happen, and then it will be truly cross-industry. because they are trying to do that for their own value chain, the trade supply chain, but they sooner or later they will need the service part of the business, the supply part of the business. And that's why financial institutions like ours, if we can join and participate, then you can see the real impact.
So I'm going to put one more question to the panel and then open it up for audience questions. So please think of some that you'd like to ask the panelists. But we've just talked about, this is about data, sharing data across different blockchains, different DLT platforms to enhance the sort of business model and the customer experience. I want to ask a question that we all hate talking about, which is regulation. So we've just had a big piece of data regulation come in. Is that going to be fit for purpose for the things we're talking about, or is that regulation already going to be defunct by the time we get to the sort of nirvana state that we're talking about here? And I'm not going to direct that at anyone because it's a regulatory question. So who wants to pick that up?
Well, maybe I should pick that up because I wrote a blog about it earlier on this week. If you want to have a read. I think what happened was I was at a conference a little while back, and it was recorded by a magazine, and the headline that came out on that magazine was I said GDPR is wrong. So that's a great headline. Unfortunately, it was a subscription magazine, so you couldn't read the context, and the context was actually a little bit more elaborate than that. And GDPR isn't wrong. GDPR is there for the benefit of the customer, and I'm really pleased you mentioned customer interests, because we often forget about why we're doing these things, because ultimately the customer should benefit. GDPR isn't wrong. It would probably have looked very different if the regulators had some insight into the power and the potential of blockchain and what it could do to ensure that privacy. And I was talking earlier on about the privacy of your sensitive information. Fundamentally, what it's trying to do is to try to help the customer be protected from the abuse of their data. And that's why it sort of came about. I'm not an expert on GDPR. It's just an opinion. But I think that GDPR was ahead of its time in a sense because it didn't have at its disposal all the tools that we have today. So what do we do today? Well, you can either ditch GDPR, well, that won't happen. Or you could work with the regulators to educate them, and this is part of what we try to do, and I know other insurers are trying to do, is to educate the regulator about the potential of blockchain. I'm sure you're doing it in banking as well. And indeed, they are coming to us, and they're not telling us how to do things. They're actually coming to us and saying, well, actually, what does blockchain do? What are you doing with it? And it's all about that education. And perhaps in a few years' time, there may be some modification. I know GDPR is very open to interpretation, but perhaps they will start to clarify things and start to recommend the use of blockchain to help achieve the aims of GDPR. That would be my view.
Thank you very much. Firstly, thank you for your attention. Thanks to FinTech Connect for having us, and thank you to our panelists.